Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report. It is the final day of the week. It's Thursday, but we have a shortened week because of the Good Friday holiday. Also, it's the first day of the new month. So in tonight's video, I'll be introducing you to some of the projections for the month on the market grid on the S&P, NASDAQ, and the Russell. The numbers are pretty impressive, and all I can tell you is we're heading for not only 4,000, most likely 4,100. And there's a lot of talk out there. There's going to be a crash in April. I don't think so. If you attended the live stream yesterday, then you'll know my opinion on that. As we look back on yesterday, just for a minute, we did see the ADP numbers come in at 517,000. So that 500,000 number sounded like a big number, but it was real. We also saw a downsized version of the infrastructure down to 2 trillion, not 3 or 4 like was rumored. But that was kind of lackluster, really. It's just a bunch of talk at the moment. We're really not there's nothing really material around that other than, like I've said before, they're going to continue to float these ideas out there, see how the markets react. For the most part, yesterday's action was window dressing or quarter end rebalancing that went on. So there really wasn't any material trend or new trend coming out of the markets, but we did see an ATH or all-time high on the S&P, and we definitely saw some big movement in the NASDAQ as well. But all of it pulled back as we came into the close yesterday, basically as there was a squaring up of the trades. But as we come into Thursday, we've got the claims numbers coming out looking at around 700,000, 690 and change is the estimates. We also have the continuing claims coming in. I'm expecting them to decline even more this week, maybe to 3.6. This number is just going to continue to drop as far as the continuing claims go, I think, for a number of weeks yet before we find some equilibrium. But as we start this new quarter, there's going to be a lot of excitement. I just don't see any top coming in play right now, but what I do see is a very high level consolidation. I'll go through all this detail here in a few minutes in the technicals. As far as the jobs report that will be out on Friday, we're looking at 600 to 1 million new jobs. Unemployment levels expected to show a drop to 6% from 6.2, so down 0.2. And the interesting thing, as I've been discussing all week, is they're releasing these numbers when the markets are closed. Now, the bond market will be open. I doubt if very many of us will be actually watching that action. I'm sure there'll be some things going on, but for the most part, we're going to see the big reaction we're going to see is on Sunday night. So that will be interesting to watch because I've not seen them do many reports like this, especially a major support like unemployment that's being watched so heavily. So let's go ahead and see how the markets are set up for Thursday, see what we can find that might lead us into the beginning of this new quarter. As I begin with the WaveTech Database overview, the dailies had an interesting rotation. In spite of the markets being higher yesterday, we actually saw 660 sell signals, 275 buy signals, so we had a negative ratio on 3.2. 1.2 had a slight bullish. It was 154 versus 123, but overall the database dropped back to 27.57. So we continue to struggle. We continue to struggle to get any material traction here and get back over the 42% level. So we're going to continue to grind in here. It looks like we'll see how this thing finishes up since today is the final day of the week. We will be running our intermediate models on Thursday night, so those numbers will be updating. I still expect to see the intermediate models to stay above 68% bullish. They're currently 75% bullish. So I don't see any material things happening in the database. It will be interesting to see if the traction comes back in, depending on how the market trades. Overnight, we're not seeing much action in the futures. They're basically flat. So there's not a lot of enthusiasm ahead of the numbers that will be released on Friday, especially with the markets being closed. So it's going to be a little interesting to see how we end up the session for today. As we start with the S&P futures, they're up 1.75 right now, 39.69. The high's been 73.50, low 64.50. As we look at the market grid for today, what we'll see is probably an S1, R1 expectation, possibility of going to an R2, which would be a 39.87 on the upside. The support at 39.58 is S1. That's basically where we've come close to that overnight. We could see a little more weakness coming in there. The extreme would be an S2, R2 for the extreme range today. We are seeing the PPMs turn up, which is encouraging, which tells us that the 39.31, which is close to, is down at the S3 STX number for the futures today. I don't see us getting anywhere near that, but we are seeing some acceleration where PPM 1 and 2 are starting to accelerate. PPM 3 is in a very positive position, so we could see some acceleration over the next several days. Let's go over and take a look at the SPX. Similar situation, but one of the things that I discussed in yesterday's live stream is that the market grid is starting to contract. As we look at the expectations for today, R1 39.79, we're going to reach that easily. My expectation is that we'll see an R2 39.87. S1 should be the low 39.65. What should happen, since the futures are already giving us an insight into how the PPMs will act on the cash, we should see on the open tomorrow that PPM 1 will go through its first and second derivative and start to show the same acceleration, but the expectations are narrowing here. The RXT for today is 4,002. So let's go over and take a look at the monthly. I said I would introduce you to those numbers on here, and the monthly expectation in R1 is 40.28, R2 40.90, and R3 41.52. As we look back at the month of March, the expectations was for a move to 39.97. We got to 39.94, so we got very close to printing an RXT number on a monthly basis, and I expect we'll see at least an R2 as we come into this coming month, which would be a move to the 40.90, almost 4100 level, and I believe if we get to that level, we'll probably move toward an R2, R3 for the month. The key number on the downside is going to be 39.17. I went through a lot of detail in yesterday's live stream talking about this 10-month moving average. This 39.17 level is going to be rock solid support. I don't see us getting through that on a monthly basis. Next market we'll look at is the NASDAQ futures, 13,126. I've talked a lot about trading between this 21 period moving average and the 40 period moving average. 40 period 13,129, so we're trading right at that level. We printed up there just above there yesterday, came very close to giving the RXT sell signal, but did not get that. But as we look at the market grid for today on the NASDAQ futures, we're really looking at the possibilities of a S1, R2, which would be 13,207 on the upside, 13,034 on the downside. Don't see us getting below this 10-period moving average, 12,949 now, and we're seeing some really nice acceleration on the PPMs here. PPM 1, 2, and PPM 3 is turning up, but we're days away from setting up this pattern that I talked about on the live stream, which is a retest of the all-time high on this market. It goes back to the 13,890 level. So just like with on the SPX, let's look at the monthly expectations here for NASDAQ. And we've got a little different pattern here from the standpoint of what the expectations are, but I'm looking at an R2, R3 number for the month on the NASDAQ futures be 13,667, 13,973. That would put us up at that upper end. Last month has to be viewed as a major reversal pattern within this pattern, which usually suggests that we'll work this range that's set up on the market grid here. It's pretty broad range, but S1 should be the bottom end of this range at 12,816, and then R2, 13,667, R3 should be the upper end as we go through this month. So we'll stay within this pattern because it doesn't look like we're going to make a new high in this pattern at the moment, not this month, but it does look like we could retest that number, and that's what I've been talking about on the daily pattern. It looks very bullish and setting up for a move much higher. Next market that I'll cover is the Russell. Russell was up 24.72. This is the cash daily. As we look at the market grid expectations, it did turn up yesterday. We're seeing a bit of an increase in volatility on the Russell over the last couple of days. So we're seeing R1 22.32. We're likely to go to an R2 today, 22.46, S1 22.08. So let's go ahead and take a look at the monthly, because this is where it gets very interesting. We're seeing what I call a volatility expansion on a monthly basis. As I look back at last month's range, we did do an S2 R1 print. We had a 2360 high, R1 2357, S2 2081, the low was 2085. My expectation for this month, since we were able to close slightly higher, is to move up to a minimum of an R1, but most likely an R2, S1 R2 2144, 2321, and it's possible to print all the way back up toward this R3 number, which would be basically a retest of last month's high and a possibility of going into an all-time new high on this pattern. So overall, as I talked about a lot on the spread differential, I don't see the Russell taking back control and leading the way up. So I'll cover that spread on Sunday night's video. The final market that I'll cover tonight is gold. Gold is down $3 overnight, 1712.60. It's had a range of 1715 down to 1706. From my perspective, it would be nice to see that the market was able to get back above the 1723, 1725 level. That's a decent rally from these levels. The PPMs are actually starting to set up a decent bottom. I talked about the STX buy signal that we got day before yesterday. It followed through yesterday, had a nice reversal. If we can close above the 1725 level today, that will set the tone for a move toward that 40-period moving average, which is 1754. I can do just like with the other markets. We do have expectations for the month of April, and this actually lines up pretty solid with some of the numbers that I've been talking about. R1 on a monthly is 1747, 1783, R1, R2. I think that's as far as we can get this coming month. I don't have any expectations at the moment of getting into the 1800 handle, and S1 1683, which would be basically a retest of those lows that we saw last month. The lows last month was 1675, so that would be an S1. So S1, R2 would be the extreme. S1, R1 are very likely. I don't think we're going to see a lot of movement. The other thing to look at here is that 1746 is the 21-month moving average. That has a nice upward slope to it. This should act as a magnet for the prices to move back toward that level. So 1730 to the 1755 level. Look at that 40-day moving average. I'll be covering this as we go through the month. This is the final market for tonight. Thank you so much for watching the live stream yesterday. Have a great holiday weekend if you're here in the U.S., and I will talk to you on Sunday night. Have a great long weekend, everyone. Hey, everyone. Thanks for watching. If you enjoyed the content, make sure you subscribe, hit the like button, and hit that notification bell so you'll know when I post my next videos and when I do my live streams. Thanks again for watching.